Hello and welcome to the co-working pop-up here in downtown Dubai. My name is Shahzad Bhatti and I'm the founder. I'm here today with Bill. Bill is from the Business Improvement Group, and today we'll be talking about getting funding for your business. So let's start off with a quick introduction from Bill in your own words.
Hi Shaz, my name is Bill Anderson. As Shaz said, I'm a partner in Business Improvement Group. So what we do is we help companies improve the way they operate, efficiencies, focus on growth and profits, and overall just improve the way they grow their companies. In many cases, obviously, we help them with their exit planning as well and put that together. Formerly, I'm an investment banker and chartered accountant by practice many years ago.
Great. So Bill, today we are going to be talking about a very important topic that's very close to the heart of our small business owners and entrepreneurs in the community. So I want to kind of start off with my 2 cents into my experience with funding in this region specifically. We were saying briefly before, I think there's a big myth within the media locally where they are glorifying the investment funding available to startups and entrepreneurs out there. What's your kind of idea on how the media is portraying what funding is actually available to startups?
Yeah, I think you're spot on. They make it look a lot easier than what is in reality quite a tough gig to get. For most people who've been through the fundraising process, it doesn't flow through the door. You have to do a lot of events. You have to promote yourself quite a bit, and you have to have yourself really well packaged before you get yourself out to the right people. So you're kissing a lot of frogs before you come across the prince, really. And I think a lot of people with startup ideas think, I've got a great idea, it's unique, the door's going to open and I'll have investors rushing through. And in reality, they're also competing with all the other bricks and mortar businesses which are up and running, have a concrete plan in place, are making money. And it's very competitive to get to the top of that pile.
So let's break it down. What kind of funding options are there? Let's break it down with, say, if I'm an entrepreneur with an idea, what options do I have in Dubai, in the UAE?
Sure. Well, I think like most places, you've got your typical ports of call, which will be friends and family. And I think that's where most people get their very early funding. And then as they start to kind of become more and more commercial, viable commercial businesses, if they're lucky enough to get into some of the accelerators or hub setups in the UAE, then that can certainly give them exposure to outside investors. But now you're talking about a different process and a lot more serious individuals who will expect you to showcase your business in a lot more professional way. I think everybody pretty much knows here banks are a non-entity when it comes to SME funding and startup funding. You do have a number, which are very few in this region, of angel type investors. And again, you've got to get your exercise, you've got to lay your information together in such a way it's acceptable to them before you get on their platforms. And then typically, there's always, I think more so probably in this region than most, you have a lot of what I call private money or family money, or private individual investors. And again, it's worthwhile spending the time building up relations with these people, because if you do find an investor who comes on board, it's not normally just a once-off effort. I think a lot of people don't realize that as well. But as the company starts to grow, there are requirements to scale up. And again, having solid investor relations is something you'll probably continue to do throughout the life cycle of the company.
So, as an entrepreneur, with a number of successes and a number of failures in the past few years, I've tried a few different options. So I've had support from friends and family. I've tried the bootstrapping option. I've tried crowdfunding, and everything. As I've evolved as an entrepreneur, you kind of learn what needs to be done and at what point. So a lot of our community, a lot of the startups, a lot of the entrepreneurs, aspiring entrepreneurs, they will have a business idea, but not necessarily something which is a tangible or a proof of concept. So they may not necessarily have an MVP product, but they may have an identified a gap in the market with a huge potential.
Right.
So which options would you recommend to them? Is that something they can immediately jump to the VCs, or would you recommend a different strategy for that?
I have to say, I suppose, look, the more conceptual the idea, the more difficult you're going to find it to raise funding.
Mm-hmm.
Look, I mean, at the end of the day, if you think of it, and I always think of it from an investor's point of view,
Mm-hmm.
you know, I can take my $100,000, you know, and invest it in a fixed income product for 5% a year with very little risk. Or I can invest that into a business startup.
Mm-hmm.
Now, for me, the quicker route to making my money is obviously the more established, you know, an idea is. So if somebody comes with a really great idea, what I would suggest to them is, you know, either partner up with somebody who can help make that idea, you know, bring it closer to actual development, and have something tangible that at least you can pitch to an investor audience.
Okay.
But
But definitely, you think the first port of call, in my opinion, would be to create some kind of tangible MVP at the very
yes, yeah,
least,
definitely.
more than just a presentation.
Yeah.
In terms of, you know, perhaps the first port of call may be to go to friends and family. Now, how do you approach presenting to your friends or to your family versus presenting to an angel or to a VC investor?
Yeah, no, that's a great question, because there is definitely a different approach. With your friends and family, you're not necessarily trying to win their trust. So, you know, you've already got an existing audience who are bought into you as a person. The challenge is, are they going to treat you as a serious commercial opportunity? And look, at the end of the day, I still think you should be presenting the key basics. You know, what kind of a market, you know, you're attacking. You know, why is your solution different? Why do you think that it's going to be successful? You should be presenting financials to them, ideally, and you know, that you know, I think those in essence will be the same. But you know, I think there's going to be a bigger leap of faith from them as well. So that is the one challenge we're getting funding from friends and family. At the end of the day, if it's not successful, I think they're a lot more difficult to look in the eye, you know. And you know, I think sometimes that takes away a person's ability to think with clarity if you know that you've got family in the wing who, you know, if you don't make a success of this, will be severely impacted. So you've got to be careful. It's a dangerous area to get into. It's a very natural source, but you know, it's just one of those areas. I think ultimately the real proof of how successful your business is going to be is when you start testing it with what I call external investors.
Okay.
Because they're going to be a lot more objective in terms of it's not going to be an emotional decision. And I think sometimes when you mix the emotional decision with the business venture, you know, which is very typically family type business, there is a danger that people have certain expectations. So I think it's very important to set out quite clearly their roles and, you know, what involvement they may or not have in the company.
Okay.
You know, equally, if you're going to an external investor, you'll have similarities, but I think it's a much more professional approach. Obviously, you have to build your profile with these investors. You know, they're going to do a deeper due diligence dive into who you are, your background, what qualities do you have. So it's just, I mean, it's a very natural protocol, I think, for a lot of startup companies, but it just needs to be approached properly.
Let's talk a bit more about the actual, you know, in my experience, I've created investor decks when I'm presenting to investors, whether this is angels, whether this is investors through crowdfunding. Is there any kind of guideline or checklist or format that you recommend to create your investor deck or your presentation in?
Yeah, I mean, look, I think different businesses will have different focus for most people, but I mean, look, it's all really going to come from the financials. That's normally a very good starting point. You know, we normally have a kind of around 10 areas where we think should be included in a proper pitch deck. And you know, in terms of the sequence for them, we typically will present what the market opportunity is. I know most of my investors are looking for scale, so the bigger the market opportunity, the more likely it is they're going to come on board. What's the commercial opportunity? You know, who are the people that are involved? What are the financials of the company? What do they need financially? And you know, how much does it cost to run it, and what's it going to be used in? From an investor's point of view, if you're raising $500,000, you know, as a finance person, I want to see what exactly you're going to spend that on. And I think this is where a lot of people need assistance in terms of how to put that piece together. But again, the team, another really crucial part. So you're not just investing in if it's a piece of technology, it's the people around that technology. And again, that's why there is a big challenge for one-person startups, because that's a big risk for an investor. Now, there are ways to mitigate to some degree, but most investors will insist on putting a proper management team around that particular individual.
Yeah.
And that's the challenge I think that we all face.
I think this is a common thing. We have many entrepreneurs and startups who have have a great idea, and they are turned down often because they don't have a technical background, or they don't have a CTO. I mean, can you recommend any kind of
For me, the ideal one in terms of a structure is a technical person and a business person.
Okay.
And not necessarily an accountant. Someone who's commercially switched on. That typically for me is the best piece to have around it. And once you have that core element, especially if it's going to be a technology type business, you need someone who does understand the technology.
Exactly.
And in my view, it's not something you should outsource. You can outsource production, etc., but the core ownership of the technical platform has to be in-house.
Yeah, I agree.
Having the commercial person though is equally important, because you can have somebody who's a brilliant piece of technology, but they need to be able to connect to investors, to their potential customers, and that's typically where the commercial person comes into play, who frees up the technical person to focus on the technical side of it and driving the development around that. Well, the commercial person should be looking at how they operate the business, what markets are they going after, building the pipeline of potential leads. And that's an interesting one, I think, as well. For me as an investor, if I can see a startup who actually has made sales, it doesn't have to be big, but if they actually have some sales on their numbers and their books, that's a huge differentiator for me. And I think the more we can focus on helping people make sales before they get out to the big investors, it's going to make it much easier for people to raise funding and get better valuations as well.
Okay. Let's move further down the line. Let's go beyond the startups who are in, let's say, the pre-seed area. We've got startups and small businesses who have actually launched. They've built a traction. If it's a tech product, they've got they're attracting many users and sign-ups. They're generating revenue. For these guys, a lot of the time it comes down to valuation for the company. How do you recommend that a startup should value their company?
Okay, so again, for me, the valuation is made up of two things. It's the quantitative, what numbers and what sales are you making, what potential future growth are you going to have in the business, and that's very much based on financial models. I see a whole plethora of different types of models being used, and ultimately you need to make sure you're using one which is going to be accepted in the industry, especially in the investors industry, as an acceptable basis to base the valuation on. The second part though is the quantitative element of a business valuation. So if I put together a few spreadsheets showing sales and projected sales for the next 5 years, I'm doing my company a disservice by not recognizing the other things. So I may have a product which has a unique selling point, a unique market, a unique client. I might be the only person in a particular area who can do this type of thing. I might be actively using something which there's no other competitors in this industry. So it's a lot of that side of things. Who's the team? Can we get into a distribution network quite quickly? So all the things which in many cases are intangible, but I think it's really important for the business owner as part of the pitch deck to sell that part as well.
Okay. And in the past I've used third-party valuations such as Equidam. Equidam is an online tool which I've used. Do you recommend to use third-party valuations, or is this something you recommend that's done in-house?
Typically third-party, because they'll have the expertise. Again, you get specialists who do it. For the business improvement company, we do it with people, but again, we use discounted cash flow. It depends on the nature of the type of business you're looking at. Ultimately, what you need to make sure is that if you're going out to the wider investor network, that it's something that's well accepted as a basis for valuation. And it definitely is one of the big bones of contention between, obviously, the business owners trying to get as high a valuation as possible, and investors coming in who are obviously trying to undercut that as much as possible. So I think if you start with a fairly reasonable and realistic valuation, you're much more likely to get people coming on board.
Could you share with us any methods of valuation?
Yeah, so I mean, typically what we'll use, it's like a multiple of earnings. But again, the nature of many of these companies is they're not making, or they don't have a significant track record. So what we're also looking at is potential market expansion. So we'll do either a 3 or 5 year projected basis, and then we'll discount that based on a discount factor. And that's a typical one that's used in the industry, based on cash flow coming in and out.
And that's specific to Dubai, or that's
that's pretty much an international process. And again, it's just making sure that those models are checked properly and that you can flex them as well. So what a lot of investors like to see is, what would happen if you went from 10,000 subscribers to 50,000 subscribers.
Okay.
So you have a model which you can use for evaluation purposes. But what I like to tend to do is, when actually sitting doing a presentation with potential investors, is to show them the what if scenario. So having a model that builds that in so that you can flex it.
Okay.
Shows sometimes, it allows you to show maybe more optimistic outlooks as well.
Kind of a best case scenario.
Yeah, exactly. And that's always good for them to see. But look, you're doing the valuation on a fair basis, and you're doing it on all things being equal, this is probably what's going to happen.
Okay.
And there's always going to be an optimistic slant in it, of course.
Okay. And Bill, we've known each other for a while now, and you've had some experience in Ireland specifically. How do you see the I call it the funding scene. How do you see the funding scene or the investment into startups in Dubai versus in other cities that you've had experience in?
I think it's less mature here, definitely. So the funding scene in Ireland and the UK is pretty mature. It's also very, very competitive. And you have I suppose a more developed angel investor network. You have more developed institutional investors there as well. Having said that, you have a lot of family money investment, potential investment here. I think the real trick is how to package it. If you take it the approach that you would do in the UK or Ireland or the States and try and bring it here, I think you'll discover to your own detriment that it's not the right way to do it. I think it's a longer road here. And it is working and building relationships, because trust is absolutely vital here. But once you break into that piece and you develop those relationships, there is a big opportunity here, because it is a very technology focused place to be. And there's a lot of very interesting startups and accelerators happening in the region. And like everything that happens in the UAE, when things happen here, they do happen quickly. So it's the momentum, I think, as well. There's more and more we see every year coming up. And look, I think, it's different strokes for different folks, and they all have their pluses and minuses.
You mentioned about the family offices and the family money. How do you approach them? Is this something they create their own funds? They'll create their own accelerator programs? I mean, how do you approach family offices?
I think the way the family offices, and look, they're not all the same. But from what I've come across, they're looking at it just like any other investment. How does it fit their portfolio? They tend to look at the people factor a lot more here, I think, and who they're dealing with, and I think that's why building that trust relationship is quite important. But ultimately, they're extremely commercial. So if you're able to show them, that you have a pragmatic approach, a commercial approach, and that you're someone who they can trust and do business with, that'll go a long way. And look, as the nature is with many startups, we tend to do more than one. So it's great to be able to go back into former investors to maybe pitch new ideas to as well. And they're very, very straight, telling you what they think is good and bad about your business idea. But yeah, I mean, look, if you can get in with a family group, investment group here, then obviously you have some of the largest sovereign wealth funds in the world, and they are diversifying, as everyone has seen in the last 12 months. They're putting some serious money into non-oil investments, because that is definitely a big part of the future investment scene in the industry. There is a funds industry here as well, but I still think it's in its growth phase as well. But again, that presents opportunities. I haven't seen any, companies who have set up a technology investment fund purely, but it's only a matter of time before they do. There's a lot of smaller ones, definitely in private equity funds.
So let's move away from the startup scene. Let's focus a bit more on small business and small business owners. So I know you're working a lot more with small business owners on selling their business. So tell us a bit more about that.
Sure. I suppose it's been something that has evolved. A lot of the work that we were doing originally with companies was around making them more efficient. As a business owner, if you're an SME business owner, you're busy doing everything. So you don't always have the time. And in some cases, you won't have the subject matter expertise to look at all these other aspects of your business outside of the sales piece. And I think that's the great challenge for any small business owner. So what Big have done is we've looked at how can we help business owners, let them focus on what's really critical to their business, and we start looking at the areas where they need it to be done properly, but they're not wasting their time doing it. So we will come in and look at how they manage their finance function, how they manage their marketing piece, their strategy in particular, because for me that's a really crucial one, to make sure that no matter what they're doing it in the right direction. So that was kind of a process which we were coming in to look at improving efficiencies pretty much and systemizing the business, so that ultimately if the SME business owner decided to bring on board investors or to sell their business, as much as possible the business operated without them being an essential part of it. And that really is the true measure of if you have a business or if you have a one-man business or a one-person business. But that has evolved as well. So again, I think in particular the UAE and Dubai is an area where people have a specific time frame in mind, and because a lot of expats come here and go, it's a great place to start up a business and exit. So we've become more and more involved with companies looking to plan that exit, and like anything, the planning is crucial. So we kind of systemize a process whereby there might be a 3-year time horizon, it might be 6 months. But the key thing is, as soon as you kind of think you're going to get into that space, the earlier you start systemizing your business, the better. And then ultimately it is about, over that period of time, looking at potential buyers, whether they're trade people, competitors, suppliers or customers, and if you start with that end goal in mind from an early stage, it definitely makes it much more worthwhile, because if you properly package that business, in the meantime, it's going to be much more profitable and it's going to be more pleasant to run that company. But ultimately, it means you're going to get a better valuation when you do get a successful investor on board. And in some cases, it's not always a pure exit. So sometimes it's a partial exit. So they might want you to stay involved in certain aspects. And that's actually quite a common model as well. And it's a nice one for generating income for a business owner subsequent to them exiting, a majority share in their business. But they're still, able to get involved in the company or sit on the board in a kind of a board member position as well.
Are there any particular businesses which you think are selling easily, selling slightly more easier than, say, let's remove tech, so perhaps F&B, perhaps retail, perhaps any kind of other particular industries?
Okay, so if you remove tech, I think, there's a lot of movement in the food and beverage business. There's no doubt about it. It is, it's huge. It's very competitive, but there's still huge scope for growth here. We see a lot of competition in that space, definitely, and there's a lot of international brands want to come into the region and partner with somebody here as well. It's definitely, in my view, food and beverage is not a place for startups. It's for people who have experience in that business, for sure. Retail, again, it's a huge retail space here. So it's a brilliant place to come and showcase your product and your company. But again, it's something that most people, when they come here, don't realize until they see how it works, is you need to partner with people. That's how you will speed your success story up. And it isn't so much a case of getting a lot of money on board, it's about connecting with the right people who can open up the distribution channels. But look, it's a trading hub. So, it's an ideal place for people to set up an office which is looking to export into or trade into Asia, and the Chinese market is massive, and there's a lot of interconnections between here and China, into the African market, again, it's just on our doorstep, and ultimately into the States. So whether you're a tech startup or a bricks and mortar manufacturing or trading hub, it is a very central location. And the fact that there is no corporation tax or income tax, that makes it really attractive for people,
So Bill, thanks for being with us today.
My pleasure.
Just to kind of end this conversation, just tell our community how you can, through Big and through your own services, how can you help our community?
Sure. So, I mean, ultimately, Big is all about helping the business owners, and it's about helping them in the ongoing running of their business. So we do programs called Business Health Check, which is effectively a one-stop review of your business, top to bottom. And it's a very unemotional review of your business. And we sit with the business owners and work out, for areas that we've identified as subpar, how we can help them get those running on all cylinders. The other areas we work at, obviously around the exit planning piece, is we will work with business owners to identify how they can improve their chances of raising funds, or improve their chances of selling to an external buyer. We try and take a very pragmatic approach to it. And as I say, the website is www.businessimprovedgroup.com, and on it we have two services. We have services which are individual services if people just want to get a dose of a particular area, finance or legal or whatever it happens to be. Or we have programs where we will take people over the course of typically 3 months. It's probably the quickest we can do, which gets them a kind of a business health check, concentrated service, which, if, for example, they have someone who's approached the company and there's a short time frame, we can come in very quickly and polish up their act, basically.
And you're also doing events and workshops in our community as well?
Yeah, look, I think it's really important in the community because, there's a lot of information for people to try and take on board. So we do a number of events. So we use the co-op space here as well to do events for people. It's really trying to connect with the business owners and provide them an opportunity, because there's good networking, but you get a lot of questions which, they're not going to ask in an open session. And it can be anything from, we've got investors coming on board and we want to show them how we're doing, or we want to attract investors, or very simple, look, we have a great business, but we don't have time to review it. So we cover lots of stuff like that with people, and it's good to do that face to face. We obviously do a newsletter probably every few weeks, but for most of our business owners, they actually don't have an awful lot of time. So we do find the face-to-face piece. Yeah, and look, it makes it interesting because you always meet people that are interesting at these events as well.
Thanks a lot.
Thanks.
Thank you for listening today. That's all we have. You can find out all of our event schedule on our co-working Popup app. Bill will be giving a few workshops over the next coming months. And also we'll be posting a few more articles and videos, so keep up to date on our app. Thank you for listening today.